theme of today, our panel is investing in the U.S. Japan Economic Partnership, and in particular, Japanese investment into the United States. And I'm just going to share a couple of facts. Many of them are actually already highlighted by Consular General Soning. The United States is the biggest recipient of foreign direct investment in the world. It has been for many years now. And as Consular General Soning pointed out, Japan is the largest source of FDI into the United States and has been for many years. And also, for those of us here in Los Angeles and Southern California, Japan is the biggest source of foreign direct investment into Southern California. I think we all just recognize the number of Japanese companies that are here in our area, the number of people from Japan working for those companies, and the number of local hires who are also working for those companies. So today, we're really privileged to get a great perspective that brings decades of experience from two Japanese leading companies and a global advisory firm on Japanese companies making investments into the United States. So I'm going to just give a quick intro of our panelists, and then we'll dive right in. So immediately to my left is Hiroshi Kawano. He's the executive chairman of MUFG Americas Holdings Corporation, which is related to Mitsubishi UFJ Financial Group, the largest financial institution in Japan and one of the 10 largest worldwide. He's also the Deputy Chief Operating Officer of International and Deputy Regional Executive for the Americas of MUFG Bank. And he also serves as the head of Japanese corporate banking for the Americas. So tremendous international experience. And prior to this, he was an executive officer and managing director of roles for global planning and corporate planning division in Japan, where he also served as the head of global planning and was responsible for planning and overseeing MUFG operations. So this is going to be a little bit of a theme of our panelists. Tremendous experience working for the United States, extensive knowledge of the US market, but have also occupied roles in Japan responsible for global operations, understanding where the United States fits into the global strategy for Japanese companies. Immediately to the left is Tetsuya Koide, who is the managing officer and deputy chief operating officer of the Americas business unit of Mitsui Company, and he serves as the Western States regional officer and officer of the Silicon Valley office. So another thing that we're going to be talking about is the role of Japanese companies in fostering innovation and technology. And he previously served as a chief strategy officer for the Americas, and is a senior vice president and CSO of Mitsui USA. Prior to that, he has worked in roles in private equity and venture capital, and has spent significant time in Silicon Valley. For those of you, I think most of you are familiar with Mitsui, also one of the largest trading companies in the world. And from today's perspective, really helpful, is involved in a number of different industries, a number of different businesses, and we'll be able to share some perspective on a wide range of areas where Japanese companies are active. And then finally, we have Kojima, who is a partner at KPMG in their deal advisory practice, and he leads the firm's Japan practice. He has several decades of M&A advisory professional experience across the United States, Japan, and Australia. And we're really welcoming him today to share his perspective on the type of Japanese companies that he's working with that are actively investing in the US market. So maybe with that, we could just give our panelists a warm welcome. All right, ready to jump right in. So my first question is for Kawano-san. MUFG became a household name in the US when you invested into Morgan Stanley during the 2008 financial crisis, becoming its largest shareholder. Can you please tell us a little bit, what was the reaction to that investment in Japan and within the Japanese business community?
So MUFG invested in 2008, immediately in the middle of the Lehman shock, it's $8 billion into Morgan Stanley. So it's just surprising. Everybody surprised. Like Japanese companies, thought to kind of, invent and sometimes deliver it. And, sometimes it's slow in the decision making, but we get the investment really quick, which is the surprising, both into the US and to Japan as well. And surprisingly, we actually issued the check, physical check of $9 billion and brought it to the New York Fair and deposited. And good news, he didn't lose the check like that year by. So to stabilize financial market. So that is a very bold movement. But sometimes Japanese companies with that kind of agreement, and I kind of hope that this our investment inspired other Japanese companies and also encourage other Japanese companies to make the bold investment here in the U.S. That is kind of reaction.
So two things you mentioned, both bold, very fast, really characterize that investment. Did MUFG have a strong relationship with Morgan Stanley before the investment? What in your opinion, facilitated?
Yeah, actually, we did have the good relationship with Morgan Stanley. We don't have a equity ownership, but we second some MUFG employee to Morgan Stanley. So we did have a long-standing relationship with Morgan Stanley. And this helps the issue making of that investment. We know about Morgan Stanley really well, which helps us this board issue making. But I'd like to cite another example. I was prior to the current coming to the U.S. I was the corporate planning in charge of all on the M&As, not only the U.S. but also in Asia. So when we invested in Indonesia, I was really a project in Tokyo at that time, and it's a $5 billion in investment. That's a very big investment, but we didn't know. We didn't have of course we have some business as usual type of relationship between the Bank of Taiwan and in our bank, but we made the investment and you can have the investment, especially given that we really want to enter into the Indonesia market, and that is kind of only target at that time. So we have to make a brief judgment, even if we don't know the target very well. But after the investment, of course, we establish a really long-term relationship. The Japanese company not probably limited to the MUFG is a very long-term commitment to the that's a very characteristic of the Japanese corporations. And now in Indonesia we are have ranked 6 position in Indonesia, and we are having great business and great partnership with the Bakuta. That's so both potential no existing relationship, or we may have the existing relationship, both types.
Thanks for that insight. Maybe for afterwards, you can tell us if the person who came with a $9 billion check, did they declare that when they went through customs? So speaking of long-term commitments, Koide-san and Mitsui in 2018, Warren Buffett and Berkshire Hathaway, a very famous investment company here in the US, especially for making long-term commitments, they became one of Mitsui's largest shareholders. Similar question to you. How is the news of this investment received in Japan and by the Japanese business community?
Yeah, I think it was announced, the Berkshire's investment was announced in August 2020, if I remember correctly. And they made investment earlier, started investment earlier. And fortunately or unfortunately, we didn't make a decision quickly because they made a decision to make an investment to Mitsui stock. So, but one thing I have to tell is that after Japan experienced a few decades of lost decades, and we had a strong initiative with corporate governance improvements, and some people started to say it was started in 2012 together with Abenomics, but it took time. But finally, it was launching. It was materialized in 2020 after, and maybe I think the Berkshire's investment was early initiative of taking that atmosphere, and it is great thing for not only for Japanese trading companies, also good for Japanese industry as a whole. And and they I think that is why, because 2023 was a year of Japanese equity. So that's a great turn moment. That was well received, I think.
For those in our audience who may not be familiar, under former Prime Minister Abe, launched a number of government initiatives labeled Abenomics, which, among other things, was intended to improve the corporate governance of Japanese companies and to focus more on shareholder returns, and in particular equity returns. And I think I'd be interested to hear, but I think it has really revolutionized a lot of governance in Japan and attracted a lot more capital into the Japanese market. So I'm going to sort of follow on with what we were just talking about. Morgan Stanley, Berkshire Hathaway, two really household names in the United States. MUFG and Mitsui, obviously very well known in Japan. For our American audience who is less familiar with your businesses here, Kawano-san and Koide-san, maybe you could highlight a few things that you would like to share about what your companies are doing here in the US.
Starting from Japanese companies, actually prior to the current assignment, I was the head of Japanese, corporate and who handles all the, who are in charge of all the relationship management of the Japanese corporation here in the States and also entire Americas. But I believe the market here is really focused. No other countries, this country's GDP is accounting for 25 or 26% of the world's GDP. And also the market cap right now is 47%. It depends on the day, but it's almost half of the market cap is coming from this country. No other countries like this. So, probably Tak mentioned in the previous meeting, but there's some uncertainty right now. So some Japanese corporations must delay the investment decision, but the long-term commitment from Japanese companies to this country remain unchanged. That's my impression. Let me share some interesting, observation. I sent a questionnaire to all the Japanese companies. You guys, change your strategy in the US, and most of the companies, don't change the strategy. Of course, timing there's a little bit, changes, but strategy don't change. That is, my impression. And also, innovation of this country is really important for the Japanese companies to acquire the cutting-edge technology and the new business model. This country is very attractive, and also actually complement the Japanese companies franchise coming from the acquisition. So that is another important point. And also all the infrastructure is well developed, and all the business environment. Basically, that this country is a business friendly environment they have. So it's a really I think there's a turmoil right now, but it's still Japanese corporations will continue to invest in this company. That's my impression.
Koide-san, I'd be curious to hear your thoughts as well as what makes the US an attractive market for both Mitsui and other Japanese companies.
Yeah, obviously, the U.S. is the largest economy, and how to capture, market here, and also, how to capture the advantage of having a business in the U.S. That's what we are thinking. And as a Japanese trading house and conglomerate, our business is diversified from mining to oil and gas to infrastructure to automobile to chemical to food, finance, ICT, so like that. And we have almost those businesses in the States. And if we say, let's say, but still, I want to highlight is that our origin is a trading. Therefore, first, we start in case of steel, we started to have a import of the Japanese steel to the U.S. market. But to process, such steel, we started to have a service centers, mostly for the automobile companies. Then we started to capture the local markets. That's what we are doing here. And also, when we think of the local market. We are doing business for 7-Eleven for the logistics arrangement, and also we are having a real estate developer here. So those are the things we are doing here to capture local market. So then always, maybe, bringing back manufacturing in the U.S. is one of the great story for us. At the same time, how to capture, growing the U.S. market is one we are always thinking.
So, Kojima-san, I know you spend a lot of time counseling Japanese companies. Some of the things that were mentioned by both Kawano-san and Koide-san, growth opportunities, size of the U.S. market, very, I guess, established rules and infrastructure, innovation. Are those things that resonate at the top of the list of the companies that you're working with as well?
Yeah, so just to add a few things, but I'm consultant's view. I've been working in the US for the last 20 years, both New York and LA, and fortunate enough to see a lot of M&A Japanese corporations have been doing. 20 years ago when I came here, in terms of Japanese companies who were doing M&As, were really Shosha, so Mitsui and Mitsubishi's, and then maybe SoftBank and Rakuten's, and those were the only guys 20 years ago. Now every company, whether you're a global operation or not, Japanese companies are doing or considering at least deals in the US, right? It's such a common tool that for growth, similar to any capital investment, but going to the US, grow outside of Japan, US, that's a playbook right now. In terms of the industry, I'll come back to that, but in terms of type of deal I see more recently is really transformational deals. What I mean by transformation is you really look over changing your original business model. So I'll give you a few examples. And for example, Toyota Motors, and Ueha-san can probably speak better than I can, but they've acquired Toyota obviously is one of the global largest automotive company. They've been making cars for 100 years, right? They acquired a autonomous business group of autonomous driving business of Lyft. Lyft is a ride-sharing company a couple of years ago, probably 4 years ago, for about $500 million. Toyota wants to transform themselves to be from an automotive manufacturer to a mobility service, transformation service provider. And the hardware that is automotive car themselves are going to be just piece of that, right? They've acquired, for $500 million they spent, they acquired several hundred highly talented engineers in the US and Europe. They've acquired technology and all the things they're trying to do in this Urban Planet platform. The platform they acquire from Lyft is key part of that, right? That's an example. Another example is Hitachi, for example. You've seen Hitachi traditionally known as a infrastructure, big-scale manufacturer of hardware and software services, right? They've acquired a company called Global Logic probably 4 years ago for $10 billion. That's a lot of money. And for doing that, they've acquired 20,000 or so talented engineers around the globe. A lot of them are in Asia and in Europe. And Hitachi, by doing that, this company, Global Logic, does is they are digital engineering service and consulting company, right? So that's where Hitachi wants to go. Hitachi has their own business of doing that, but by acquiring this, they want to transform and enhance the move and advance the move into that area and support their customers, transforming their businesses as well. These type of transformational deals, you cannot get that in Japan or anywhere else in the world. Really, US market is where most advanced technologies and discussions are happening.
I'd like to hear a little bit more about your perspective about M&A. In my career, working with Japanese companies, and from what I've known about Japanese companies here in the US, a lot of companies came here sort of through organic growth, setting up subsidiaries, growing their businesses, possibly forming partnerships or joint ventures with American companies. But really, like in the last 10+ plus years, M&A, including the type of transformational acquisitions that you've mentioned, have seemed to become a much more regular tool of Japanese companies. I'd like to hear a little bit more about how did that happen? Do Japanese companies now have large internal M&A groups? Maybe you could talk a little bit about how did M&A become a big tool for Japanese companies?
Yeah, so like I said, a little bit, but it's a necessary tool. It's a must. You cannot, traditionally, a lot of Japanese companies, and you can probably relate to some of the people who are here, can relate to that, but us consultants too, but we got to do it by ourselves. We got to manufacture and build ourselves, has been a big culture of Japan. And the last 10 years, really, that's been changing. Automotive companies are doing deals, a lot of deals to grow. How we help often is some companies come to the US knowing what they want to buy. They know the value chain. They know competitors, market, suppliers, and acquisition targets typically comes from some of these adjacent areas, right? And they may have already started talking to those companies about potential partnership, and we are there to help just facilitate that discussion. But a lot of other time, actually, and M&A being such a necessary tool for you Japanese companies for growth, but a lot of companies come here without a good idea about what they want to do. And they'll come to us, they'll come to the banks and say, hey, my boss just announced that we're doing a deal in earnings release. I'm here in the US to look for a good target. KPMG, can you help us? Okay, we'll try to help. What do you want to acquire? What's your business goal? This and that, and technology and that. Okay, what kind of size? Anywhere between 10 million to 200 million. Where do you want to buy and go? East Coast? Or maybe West Coast, because my boss wants to go to West Coast. And there's a lot of that type of sort of earlier learning curve as well. And we're here, like as a consultant, we're here to really help them as well. But it's a really big mixed bag. But directionally, like I said, it is a big market. The US is a big market, and there are a lot of opportunities for Japanese companies to grow here.
So maybe for both Koide-san and Kawano-san, you both mentioned the importance of the US market as a growth market for your company's strategies. Sort of what Kojima-san was mentioning, the decision whether to build your own business here versus doing an acquisition. Maybe you could talk a little bit how your companies think about that. Is it primarily a question of timing, like you need to do it faster than you could build it yourself? What are other considerations that come into the strategy, whether to grow your business organically or to do an acquisition?
I see. We are taking normally gradual steps. What was happening here is, as he explained, we are quite active investment and M&A in 2000, but after experiencing so many deals in mid 2010s, we had so many experience of a turnaround. Then our direction has been changed to the discipline. So then, March 2015, we experienced negative profit at the time, and that was the significant experience for us, and we changed our mode, and therefore gradually we're gonna build. And for example, we made an investment into Australian iron ore mining. The size was 5 billion, but that is an extension of currently existing business. So then that is the kind of approach we are taking today. But still, the tech is a very different animal. So therefore, we are exploring what is the right approach to that. But generally speaking, gradual steps is the one we prefer today, rather than having a deal from investment banks or yeah, that's kind of the things.
very simple answer is we do both organic and inorganic. Like it's if we can do it by ourselves, we don't have to do M&A. Like very simple. But if we cannot do something by ourselves, we will use the M&A. That is the kind of very simple principle. Like Morgan Stanley's investment, Morgan Stanley, does have the very leading, the M&A capability. It's a top, M&A firm, all over the world, which we don't have, and they have the global reach, the whole financial institutional clients, which we don't have. But we do have the Japanese corporation relationship, right? So we combine, right? So that's the reason why, we, invested in the Morgan Stanley in the 2000. And that is one of the reasons why we invested in Morgan Stanley. And Indonesia, as an example, we cannot start, by scratch, we may be able to go to the, Indonesian people and, collect the deposit individually, but it takes 100 years. So we acquire Bank Danamon to start retail and small and mid sized companies, businesses in that country. So that's simple. If we cannot do it by ourselves, just buy it.
So both Mitsui and MUFG are very experienced in the world of investments. Maybe turning back to Kojima-san, I imagine you work with some companies that they're doing their first major acquisition in the U.S. Could you talk a little bit about what are some of the unique challenges Japanese companies have when making a first acquisition in the United States?
Yeah, so I have to be careful. So there are a lot of wide range of experience that Japanese corporations have. First deals tend to be always challenging, obviously, but a lot of times they don't realize they're a first timer, and there's certain. So our role, I always think what KPMG's role is, and of course we're a consulting firm, of course we're an accounting firm, so we can do valuation, accounting, consulting, investment banking even, but those actual service type of service aside. What my role when we're helping Japanese corporations doing deals in the US is really twofold, two main parts. One is be a translator or bridge between Japanese acquirers and the US sellers. When I say translator, I don't mean just literally English and Japanese translation. There's a piece of that there. But more in terms of the culture and how you think about the deals and the value proposition you think. I said yes, or I said goodbye, you said hello. That type of difference is always there. But Japanese corporations tend to think, okay, we're here to do the deal. We're thinking about longer term value creation, relationship building, and preserving the company and the growth we're trying to look for in the US, whereas the seller, US companies tend to think shorter term returns, value propositions, financial returns, and they want to get out of it as soon as we can. That big bridge it's not something that a lot of time earlier stage, newer experienced companies can cross easily. So people like us, people like law firm, like yourself, I'm sure, investment bankers are there to help. And it's harder than you actually think doing deal in the US. The other part is, second part is really being a bad cop. And what I mean by that is we're there to ask tough questions, negotiate hard on behalf of our client, be a bad guy, and that really helps, in my view at least. So one recent example, right? Our client, our buyers have to have, after closing a deal is not the goal, right? For our buyer, you have to continuously building the company and achieving your goal. So you want to have consultants do hard work. and dirty work. But recently, I had a client looking for restaurant businesses in the US, and some of the locations weren't doing good as they thought. So we're there to do due diligence and valuation and asking a lot of questions on why some restaurants are not performing as well, the reason there, potentially evaluation implication, because those locations aren't doing very well, can we lower the price, that kind of discussion. And the seller didn't obviously like it. They blamed KPMG for asking those questions. They went back to the boss of my client, buyer, said, why are you doing this for us? This deal, we don't want to do this deal because you're having KPMG do all these questions. I don't like the questions. And the boss of my client said, oh, that was a mistake. I'm sorry. I didn't mean to ask those questions. I think KPMG did that themselves. But we can take that off the table, for example. And okay, didn't go well with me, but that's my value we can provide. So that's what I mean by asking, being a bad cop and asking tough questions. And I think that's where a lot of earlier stage Japanese companies doing deals are something they can learn as well.
Maybe similar question both for Koide-san and Kawano-san, both as very experienced investors in the U.S. economy and U.S. companies. What are some challenges that you regularly face when making decisions to invest in U.S. companies?
Yeah, what I'm seeing is, again, yes, that's at speed. And yeah, for example, what happened is that we made a bid, we made a second bid, and then two companies selected, but our competitor raised the price to 1.5x. Then if you want to take this price, you need to kick out Mitsui. That's the kind of the discussion. Then they give the target company for just 2 days, but they grab that, and if we started to do that kind of due diligence, and I don't think it works for us. And in my sense, operational due diligence is the one. Based on that, we can be very successful after investment or acquisition. So speed and momentum of the U.S. deals now allow us to conduct any operational due diligence. So, but I think because of the uncertainty today, maybe the M&A activity can be slower, and it may be a good chance for Japanese company to do deals on our pace. So then I'm quite curious to see the market today.
So I was involved in the many M&A transactions in many countries. So knowing that U.S. is a really infrastructure of the M&A is really well prepared, and kind of I won't say easy, but it is very well prepared, like to do the M&As. Like we have that good advisors, and we have the very sophisticated laws and regulations to conduct M&As, and America is really accustomed to the M&As as a means. It's like as a BAU, business as usual. So I think, relatively speaking, M&A in this country is easy to conduct. But having said that, I'd like to echo what Koide-san mentioned. One is uncertainty right now. Uncertainty means that we cannot create a concrete business plan, which means we cannot do the valuation, which means we cannot do the investment, make the investment decision making. That's number one. And number two is for the Japanese companies, of course, a regulatory approval. Always we have to have the regulatory approval to close the transaction. But if that regulatory approval environment becomes really unstable, that's a big uncertainty to consummate the transaction. Always even though we announce the transaction, then after regulatory environment, we close the transaction. That is the kind of order and sequence of the transactions. But if we have the uncertainty in the regulatory like approval, that's really tough for the Japanese corporations to make the the decision of the announcement. So yeah.
We're going to, a little bit later, get more focused on current market conditions and following on with our prior panel. Uncertainty seems like it's a really big issue for, of course, all companies, but Japanese companies in particular. But following on a little bit of our M&A discussion, I wanted to ask you about post-merger integration. Even for domestic acquisitions, managing a company you've acquired is very challenging. Could you maybe talk a little bit about your experience managing the companies that you have acquired? Do Japanese companies tend to be very hands-on once they've done an acquisition, sending many people to run the company, hands-off, letting the subsidiary that you've acquired really kind of run its own business within some general parameters? I'd love to hear your observations there, and if you have any insights on what you think makes a successful acquisition. Any of you could start?
I can start. I'll keep it short because I like talking. But so a lot of time when we start helping Japanese companies doing deal, and one of the key issues they think is, hey, KPMG, management retention is key. But you got to keep these guys, CEOs and CFOs, and they know the customers, they know how to run the business. You go, hang on. Do you really want to do that? Because it's important to retain the management, and because, like you said, post-merger integration is important. Something like 70% of the deals doesn't go well, or doesn't get the result that you wanted because integration didn't go well, right? So Japanese corporations tend to think we've got to retain the management. They can run the business as it is, and we'll come in and sort of slowly make changes. That's not a bad idea, but you really have to understand, because management retention, it's expensive, and it's going to be slow. You won't be able to implement the changes or new strategy, growth strategy you want to have with the original plan, right? I would suggest that you have to think about management transition, not retention itself. Oh, by the way, management with a company that was hired by the previous owner, they're done. They're getting retention deal bonus, and they're about to move on. So trying to retain someone for some money for another 2 years, it's not going to probably work very well. So think about management transition. Think about bringing in new people, either from your own organization from Japan or anywhere else, or think outside and look for someone right now. Maybe give 6 months to the current management members. And that will keep ease for the employees as well. You really definitely want to keep the employees, because they are the ones that are doing hard labor, selling and building stuff. But management level is transition, not the retention. It's something I always see.
Yeah, a few things I want to mention is if we're gonna acquire a company just by ourselves, and maybe we have to have a courage and to replace management and take management role by ourselves. Unless we have that, the determination, and then it will be very difficult. Sometimes Japanese company take a federation type of approach. So we're gonna give the acquired company to give autonomy. But if something happens, we need to step up, and for that purpose, we have we are hiring many EX strategic consulting firms staffs. And also we have digital dedicated people. They are absorbing all the data inside the company. And also, together with accounting team, we create task force to turn things around. Those experience will be very helpful. But on the other hand, your partnership is also important. For example, in our case, we have doing truck leasing business together. Penske Automotive Group. And our relationship with Penske is started in 2001. But actually, that was originally introduced by Toyota. And our relationship with Toyota was also started 1899 because we supported originally Sakichi Toyota's business. He became a founder of Toyota after that. So that's our start of the relationship with Toyota. And Toyota's relationship is turned into Penske. And Penske's relationship in 2001 is turned into truck leasing business. So then, our mutual relationship is trust is very, established one. Then things will be pretty much successful, even though we are having minority investment. So then it's up to the situation. But 100% acquisition case, dedication, determination, and those are the very important, I think.
I guess it depends on the each case of the M&A transaction, but generally speaking, if the acquirer can add value to the target, probably we can send many like the Japanese management to the target in order to realize the synergies. But if it's a kind of standard operation, and if the target is standard operation and run the business by themselves, we don't have to send many, Japanese experts to the target company. So it depends on the nature of the business and how we can bring the value. It can mean that the Japanese parent can bring the value to the target. That is a short answer.
Koide-san, going back to your relationship with Penske, it sounds like it started many, many years ago and has grown into a much larger partnership. Can you talk a little bit about, from your perspective, what makes a relationship like Penske successful, forming important partnerships in the U.S. with other businesses? Is it having a pre-existing relationship? Is it growing the business relationship slowly? What are some other factors that are important to Mitsui, and maybe from what you've seen about other Japanese companies that lead to successful partnerships with companies here in the U.S.?
As I mentioned, it started with a relationship with Toyota. We were originally, helping Toyota's, export and manufacturing in the U.S. So then, how to establish the sales distribution, the channel is one of the things. And based on that, we started to make an investment into Penske. And it's a mutual collaboration. And of course, they have a very strong dealership capability. But at the same time, they want to expand their business into other areas, especially in the decarbonization era. They do not have specialized tool. We are providing. We have an energy team and infrastructure team, and they are providing those kind of solution to Penske. It's a kind of the win-win collaboration. That if we can establish that kind of things, it may work well. But of course, sometimes partnership doesn't work well. If there is mostly that is coming from strategical, the purposing issue. But if there is a case, we have to solve issue together. That's we are experiencing.
We've got a few minutes left before we get to Q&A, and I just wanted to sort of change gears again. So we've talked a lot about the growth opportunities, the importance of the U.S. market, really long-term approach and commitment on the behalf of part of Japanese companies into the U.S. market. You've all mentioned this period of uncertainty. The last panel talked about it a lot as well. Can you talk a little bit about more in terms of your companies and other companies you're seeing? What approach are you taking to handling this uncertainty? Are you just pushing forward? Are you taking a longer-term view of maybe waiting a few years or waiting until the current administration has changed? Tell us a little bit more about your thinking process of dealing with the uncertainty that's going on in the U.S. right now.
That's tough question. It's changes every day. So if everything has fixed, like tax deal is done, like we can make that decision. But under the current uncertainties, like all we can say is like we should do what we can do right now to prepare the like many scenarios, and depending on the scenarios, which kind of alternative we should take. And once the all the uncertainties clear out, we can take this option, this option, this option. That kind of studies we should do. And for the my clients, as a Japanese corporate head, like some clients are really that stick to the original strategy, just seeing a timing how we can invest. That is kind of a cycle big right now, but now is a really tough time to make the final like decision. Yeah.
Yeah, to attend this session, I revisited Mitsui's earnings calls again, and what I found is that currently Mitsui's profit level, if we talk about this fiscal year, it's almost 6 billion level profit after tax basis, and they are saying that 2 billion, about 2 billion is coming from the U.S. So it's quite significant somehow, but what they are saying is that about slightly above quarter of profit is coming from export from the U.S. and slightly less than 75% of the profit is coming from U.S. domestic operation. So import from Asia and Japan is less than maybe 2% or 1%. So to that level, impact of the tariffs are limited. But that being said, still if tariffs triggers a general recession, then that would give us a big impact on commodity price or our businesses. That's the biggest challenge we are seeing. Therefore, sometimes I'm very happy if President Trump is going outside U.S. and no news is coming, and I hope he can create more overseas business trips.
Yeah, I can talk not so much from a regulations or political perspective, but industry perspective. One industry I see, or we see a lot of investment in the U.S. is home building and products that goes into houses. And this is relatively, obviously, economy has a lot of impact on interest rate, and it swings a lot. But in terms of manufacturing tariffs, it's relatively less impacted. So, for example, a lot of house builders from Japan, Sekisui House or Sumitomo, and you name, they're all doing series of acquisitions in the U.S. And Mitsui probably has house building business in the U.S. as well, because population is growing, economies, there will be swings, but the economy are continue to be strong. And Japanese house makers come here and build, right? And it's also a technology play. So technology in Japan you can bring here back, because houses you build in Japan, there's a lot of things that U.S. market need now, things like earthquake-proof, fire-proof, and natural disaster-proof. These are really good market fit right now. And when I say products that goes to the house, air conditioner or water heater, so Japanese water heater is small. It's called tankless water heater. And you don't have those big tanks that in your garage or warehouse. It instantaneously heats the water, this small tank. And this is before COVID, before this Trump administration, but they've been pumping up the production in the US because that's a growth area. Technology is coming. And another example is toilet, right? Toto has famously, if you have been to Japan recently, there's wonderful product in Japan called washlet. And you laughed, 10 years ago you laughed at it, but now it's popular here as well. Toto's US sales is surging. And everything I'm telling here today, by the way, is public information. But yeah, so technology of house building plus product that goes in, that's one area I think it'll be continue to be strong.
So I think we're going to shift into our Q&A time. So just a couple things. If you have a question, please raise your hand. A mic will be going your direction. If you could state your name, affiliation, and then this is the most important point. You could ask your question quickly. We'd like to accommodate as many questions as possible. So if anyone has a question, please raise your hand and we'll get going.
I'm Hiroshi. I'm a partner and portfolio manager at Capital Group companies. I invest globally into stocks, including Japan. So I was listening to your, thank you very much, listening to your discussion with an interest. Couple things, I mean, Morgan Stanley's case, great, fantastic M&A. But I mean, the general perception of Japanese M&A into U.S. is not necessarily all successful. I think if you can sort of like distinguish what makes Japanese M&A into U.S. successful, what are the characters that make it unsuccessful? I can think of like, level of Japanese yen maybe, because everybody reports in Japanese yen in the end. But if you can kind of like, distinguish the successful and unsuccessful, what might that be? Thanks.
Maybe if any of you would like to jump in and respond. Successful characteristics, unsuccessful characteristics of Japanese M&A?
Probably simple answer is like if synergy is realized, and that is a good successful M&As. Morgan Stanley's investment, of course, successful in terms of all the profitability, coming from the investment, but also, as I said, like Japanese client base, and also the Morgan Stanley's global reach to the the foreign institutional clients, that was synergy coming from. So that synergy, how we can realize the synergy is very simple answer, but make the the successful like transaction or not. That is my view.
In our case, we are setting a strategic goal and quantitative goal, and if the assumptions are different, the corporate is tracking the differences from the original investment plan and actuals. So then, if deviation is to some extent, then they're going to define, oh, it's a failure. So that's the approach we are having.
I say long-term planning and commitment to actually execute that plan. I talked earlier a little bit about management transition. Don't assume current status quo management can do the job that I'm asking you. M&A is like marriage, right? So getting married is one step. That happens next 40 years, and there's up and down, obviously. But surprisingly, a lot of Japanese companies aren't prepared for that. A lot of time, after acquisition is done, they'll come to us and say, hey, we don't have anybody to run this business. Can you help us find? That planning should have done 6 months ago. That's just one example. But lack of commitment, lack of long-term planning. If you can do those things and commit, that it'll be more likely successful.
Right. Next question, right here in front.
Thank you, Scott. Dick Traub, Koide-san, if I understood you correctly, you said something like 72% of your profits in the United States or with America come from domestic operations.
Sorry. It was 2% is import from Asia to the United States, and maybe 25% is the export to the rest of the world, and maybe 70% plus is a pure domestic business.
Okay, but in those domestic business that are so profitable, do they import a lot of components from Japan?
Yes, we are importing some, but in case of oil and gas, it's a purely closed business. And Penske, automotive groups, dealership business. If there is a case, some cars are obviously imported, and some parts are imported. And we have the edible oil businesses. Mostly, the materials are manufactured in the U.S. So it depends, but mostly, the closed in the U.S.
I see a question there in the back, on the back right.
Hello, my name is Masahiko Kakudo. I work for JFE Steel, which is second largest steel producer in Japan. Looking at the current situation about the Trump administration and the Nippon Steel, U.S. Steel case, I realized that to do business in U.S., we have to operate in U.S. But I also realized the cultural and political challenges of Japanese manufacturers acquiring traditional U.S. manufacturers. So my question is, I understand that U.S. is still an attractive market, but what kind of cultural or emotional challenges we have when we want to acquire traditional U.S. manufacturers? And like a general perception of American people about foreign companies acquiring traditional manufacturers in U.S.
Please ask Americans. It's how we really perceive the acquisition is really. But one thing I can say, communication strategy is really important to. We are really friendly, it is a general discussion, but we are very friendly, acquirer. We can bring these values to to your company, and we can do this and do this, that, and like Nippon Steel, they will transfer the significant technology to the U.S. Steel, which surely improve the U.S. Steel's operation. That kind of value, what value you can bring to the target, and the communication strategy is really important, I guess. And also what this is not limited to the M&A, but business as usual as well. But the commitment to the community is really important. We should not really forget about that. It's regardless M&A and the organic, like in Los Angeles, Kai-san is sitting here about Japan House and Council of Japan and the Japanese Business Association, those community is really important to gain the understanding of from the people for that investment. So when I was head of Japanese corporation, it really that successful Japanese corporation has a huge commitment to the community. How we can contribute to the community. Of course, we have to meet the expectation from the shareholders, but we have to do the social contribution to the society and greater good of the America, in this country, so that is an important mindset we should not forget. So.
Yes, thank you for the question. It's very difficult to tell, but obviously maybe Rockefeller or U.S. Steel, it's a flagship of the U.S. businesses that may trigger something emotional. And another thing is obviously political things. Is that maybe as everybody knows very well, Pennsylvania is one of the most toughest swing state, and also Ohio. When you take a look at the Senate election situation, it was very tough competition, and Cleveland Cliff was very strong in Ohio, and they can support the Democrats for the Senate election, and those kind of complex trigger this time of the difficulty for Nippon Steel. But I think Trump. I hope that Trump can approve the deal, even though it may not be a straight, plain vanilla acquisition. If it's successful, Nippon Steel, that would be okay. But I think you are from JF East, so then I'm so sorry to say that, but.
All right, well, that's our time for today.